Welcome to today's presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. Now, we will be mixing technicals with fundamentals again today, as usual. Please feel free to add in the comment section any trading instruments you would like us to have a look. If we have time today, we could always go through it, and if not, we can always make it tomorrow. We are in front of EURUSD's daily chart. Mind you that all charts to be presented are to be of the same time frame unless otherwise stated. Now we note that EURUSD yesterday fell, putting to the test the upward trend line. I would be signaling here that the upward trend line practically hold it, and I think that would become more obvious if we drill into the 1 hour chart. And you can see how that was put to the test. Yet the pair quickly corrected higher once again. So that, back to the daily chart, that tended to imply some strength on behalf of the upward trend line. On the other hand, we note that the pair seems to find some difficulty in breaking above the 1.12 resistance level. That was evident right here, which was the 26th of August, but also here at the 18th of September. So for a bullish outlook to occur, I would require the pair to be able to breach above the 1.12 resistance line and start aiming for the 1.1325. Otherwise, we may see the pair stabilizing, and at this point we have to reverse the role of the R1 from resistance line to support line. And let's also correct the labels, starting with the R3 from 1.1325 to 1.1425. We're talking about 100 pips higher. The R2 being set at 1.1325. The R2 at 1.12. The S1 at 1.1110. The S2 at 1.10. And the S3 at 1.0915. Hence, for the time being, we tend to maintain a bullish sideways movement bias for the pair. And I wouldn't be surprised to see the pair correcting below the S1 once again. I would like to have a look what the release of the EFO indicators had about an hour ago. Drilling to the 1 minute chart. Unlocking it. Needle thread. Okay, the pair seems to have gotten some support. More or less, the release came slightly, had some mixed signals. On the one hand, we saw that the business expectations dropped as low as it was expected, reaching the reading of 86.3, but the current conditions seem to have deteriorated beyond market expectations as the reading of the indicator dropped to 84.4. So we're talking about a reduced optimism about the outlook of the German economy, but the troubling part is that the actual conditions on the ground of the German economy deteriorated more than expected. That tended to drive the composite index, which is the IFO business climate, lower than expected. That's not exactly good news for the German economy. However, on the other hand, I would be noting that the situation could be far, far worse. And market expectations, market reaction tend to imply that there was some support, albeit immaterial, at the time of the release. Back to the daily chart. Now we expect that today we will have beyond McCall, who already spoke, and the release of the EFO indicators. I would be noting from the ECB also Klaas Knot. Now Klaas Knot used to be, and in my opinion partially still is, a hawk. However, given also the release of the PMI figures yesterday, which delivered a substantial blow in the euro yesterday, I would note that we may see a change of stance, and probably we may see Mr. Knot actually supporting the idea of a more easygoing policy by the ECB, which could be interpreted as further rate cuts. Now, for a bearish outlook, that seems to be pretty difficult because the pair would have to drop. Okay, clearly break the pre-mentioned upward trend line, break the R1 1.12, sorry, the S1 1.1110, but also I would require the pair to breach the 1.10 S2. We need a lower throw than this one for a bearish outlook to emerge, in my opinion. I know I'm a little bit conservative, but for the time being, the pair seems to be moving in a sideways motion between the R1 and the S2. So we're talking about a corridor which is about 200 pips wide. Let's have a look at USDJPY. Now, USDJPY, despite correcting a bit lower yesterday, it actually verified the validity of the upward trend line guiding it, and at the same time also verified the validity of the S143.45 support level. The price action is on the rise today, and that's interesting because in contrast to EURUSD, where the US dollar is losing against the euro, in USDJPY, the USD is gaining. I would maintain my bullish outlook for the pair and expect it to start aiming for the 146.85 resistance level. One small word of caution here. The RSI indicator has reached the reading of 50 after hitting a floor at the reading of 30, which tends to imply that, okay, on the one hand, the bearish sentiment seems to be or have to fade it away. On the other hand, though, the fact that the indicator's reading has reached the reading of 50 does not imply a buildup of a bullish sentiment. For the bullish sentiment to be implied, the indicator's reading has to breach above the reading of 50 and start aiming actively for the reading of 70. But the upward trend line, which has been active over the past week, right here, actually since the 16th of September, tends to imply that the upward motion could be maintained, and that's why we maintain our bullish outlook in conjunction with the fact that the S1 has been breached, the 143.45 has been breached to the upside, and the level has been used as a support line. Let's have a look at GBPUSD. There you go. Once again, we see how the pair is moving in an upward fashion, implying that the US dollar is losing ground against the pound. By the way, may I add here that the pound may have been the main winner of the day yesterday, in contrast to EURUSD, which was the loser. EURUSD lost ground across the board. And I would be noting that the interesting part of the movement yesterday, let's drill into the 1 hour chart. was this. And the main reason I'm highlighting this throw here is the fact that it dropped, it briefly tested the 1.3260 support line and then jumped right up. That tended to highlight more or less the validity of the level, back to the daily chart, and verified, in my opinion, the upward motion. That's also being verified by the RSI indicator, which has reached the reading of 70, implying a strong bullish sentiment on behalf of the market for the pair. Again, one small word of caution here. The fact that the RSI indicator has reached the reading of 70 and is about to breach above it, you can see it playing right now, tends to imply that the pair may be nearing overbought levels. And in such a case, the pair may be ripe for a correction lower, or even stabilization. Similar signals are coming from the fact that the price action over the past 1, 2, 3, 4, 5 days, that's today's European and Asian session, is slightly breaching above, or if you prefer, flirting with the upper Bollinger Band, which may slow down the bulls or even cause also a correction lower. So overall, we tend to maintain our bullish outlook, yet we are highlighting the possibility of a correction lower for the pair. Should the bulls maintain control, we may see the price action of GBPUSD breaching the 1.3435 resistance line over the next couple of days, and that would be paving the way for the R2 1.3630. By the way, it would be interesting to note how old the pair hasn't reached these levels since the end of February 2022, so we're talking about 2 years and 3/4 and a half, 2 years and a half of the level not seen such, for the pair which has not seen such levels. At this point, some cleaning action. Back to the daily chart. Okay, let's have a look at USDCAD. Now, USDCAD has been dropping since yesterday, and that could be implying practically that the Canadian dollar is more or less strengthening against the USD, the southern partner. I would like to have a look at the calendar. Yeah. Now, for loonie traders, I would be highlighting the speech of BOC Governor McClellan. And it's in the late American session. Now, should the BOC governor actually highlight the dovish outlook of the bank, we may see it weighing on the loonie, and at least it could clip the gains or reduce the speed at which USDCAD bears are influencing the pair's direction. So that's one factor which loonie traders should be keeping an eye out for. Oil traders could also be influencing CAD's direction, given that Canada is a major oil-producing economy. And at this point, I would like to see what happened with the release of AP's weekly crude oil inventories, which is tonight. Now, this is interesting. The forecasts are for AP to report a drawdown. Practically, it's reversing the increase of oil inventories by 2/3, which is quite interesting. The last reading of the report was of an increase of oil inventories by 1.9 million barrels. Now it's expected to drop by minus 1.1 million barrels. And such an indication would imply more or less that the US oil market remains tight and could support oil prices, which, by the way, let's have a look how they're moving. And they are on the rise, ladies and gents. Definitely we have to shift the upward trend line to the right. The price action of oil has breached above the 71.40, and that could be supportive for the loonie as well. Back to the USDCAD chart. So we get some conflicting messages on the fundamental level for loonie traders. On the one hand, we may see Tiff McClem outlining the dovish outlook of BOC, which could weigh on the CAD. On the flip side, we see oil prices being on the rise, which could support the CAD. It's going to be an interesting American session. Should the bears regain control, which for the time being I'm not certain that they are in control, despite the drop yesterday and today, then we may see USDCAD dropping, breaching the S1 1.3475, which could pave the way for the 1.3340. Now, for a bearish outlook, I would require the pair to drop below the S1, but also use the S1 as a resistance line in order for it to be active. On the flip side, should the bulls take over, we may see the price action of USDCAD rising, breaching the R1 1.3610 and start aiming actively for the R2 1.3720. Should the sideways motion be maintained, then I would expect the price action to remain between the S1 1.3475 and the R1 1.3610. Let's have a look at AUDUSD. Now, AUDUSD, in my opinion, may be the most interesting pair these days. It has lots and lots of fundamental issues behind it. Okay, number one fundamental issue I would be noting would be the Aussie's commodity currency as such, the commodity currency nature. That tends to more or less make it more sensitive to the market mood, meaning that whenever we see the market mood being more risk-oriented, that tends to support the Aussie. On the flip side, should the market mood be more risk-off or more cautious, if you prefer, then we may see the Aussie suffering. Today, during the Asian session, we had the release of RBA's interest rate decision. Now, the bank remained on hold, keeping the cash rate at 4.35%. That was widely expected, so that didn't provide any major market reaction. In the accompanying statement, the bank maintained a rather moderate but hawkish stance, in the sense that it highlighted the need to combat inflation and at the same time implying that rates are to remain at the same level for longer, possibly. It was characteristic that RBA Governor Bullock, Michelle Bullock, she stated that rates are to remain at that level for a prolonged period, or I wouldn't say prolonged, for longer. And I think that was a verification of the bank's hawkish predisposition. And the priority set by RBA as clearly on curbing inflationary pressures further, while at the same time, they're promoting maximum employment as per mandate. The second issue I would be highlighting on a fundamental level for the Aussie would be the announcement of PBOC from China for a wide range of supportive measures for the Chinese economy and the property market in China specifically, which, in my opinion, tend to provide some support for the Aussie given the close economic Sino-Australian ties, given that Australia exports a wide amount of raw materials including iron ore, coal, and others, to China. Hence, should economic activity in the construction sector of China slow down even further, contract even further, or in the manufacturing sector contract even further, then we may be expecting some reduction in the Australian exports of raw materials to China. So the supportive measures tend to enhance the possibility of increased economic activity and thus are fundamentally supportive for the Aussie. However, we have to note here that the Aussie does not reflect that. The Aussie practically stabilized during today's Asian and early European session around 0.6835. It's right in between the S1 and the R1. For a bullish outlook, we would require the pair to breach the R1 0.6870, which was a peak during today's Asian session. And in that case, we may see the price action aiming for the R2 0.725. Mind you that during tomorrow's Asian session, we are getting from Australia the CPI rates for August. It's on a month-to-month basis. Let's have a look if there are any forecasts about that. It would be an interesting element. Yep. Now the rate is expected to slow down from 3.5% to 2.80. And if that's the case, then we may see practically the Aussie losing ground, as that would be implying further easing of inflationary pressures within the Australian economy and could actually force RBA to ease on its hawkish stance even further. Such a prognosis, i.e. the monthly CPI indicator slowing down from 3.5% year-on-year to 2.8% year-on-year, could actually enhance market expectations for an earlier rate cut by the bank near the end of the year, maybe a little bit earlier. And all of that combined could weigh on the Aussie. At the same time, I'm highlighting tomorrow during the Asian session, on Thursday during the Asian session, the release from RBA of the Financial Stability Review. And that could, depending on the content, actually create some fluctuations for the Aussie. For the time being, on technical level, we tend to maintain our bullish outlook as mentioned before and expect the pair to breach the R1 0.6870, thus paving the way for the R2 0.7025. On the other hand, should the bears take over, I would expect the price action, or at least require the price action, to initially breach the pre-mentioned upward trend line, which has been guiding the pair since the, let's have a look, 11th. Yeah, the 11th of September. And such a breach would be signaling exactly the interruption of the upward motion. For a bearish outlook, I would require more. I would require the pair's price action to breach below the S1 0.6795. And not only that, but to start actively aiming for the S2 0.6645 support level. Let's have a look at USDCHF. USDCHF remains in a clear-cut sideways motion. It's characteristic how the pair is now even testing the downward trend line, which has been guiding it, and that has been ongoing since the, let's have a look, the 3rd of July. On the other hand, we may see the bear still exercising some role, but the RSI indicator tends to imply that the bearish sentiment among market participants seems to have been easing for the pair. So it's characteristic how the RSI indicator has neared the reading of 50. It's actually at 45.4. I would expect the sideways motion between the pre-mentioned levels, the S1 and the R1, to be maintained, the downward trend line to be broken, For bullish outlook, we would require the pair to breach the R1 0.8550 and start aiming for the R2 0.8750. It seems to be kind of premature for such a prognosis right now. Some bearish tendencies could re-emerge, but I sincerely doubt it. Okay, let's have a look at commodities and let's finish off the chart of WTI. Now WTI has been on the rise. It has breached the R1 71.40 resistance line. We're turning this into support line. And let's have a look for a new ultimate resistance line. I'm placing the bar pretty high right here on this peak. I know that the distance between the R2 and the newly R3 at 83.85 is pretty wide, but symmetry is not exactly my concern right now. So let's correct also the labels. Starting with the R3, which is now being placed, as we have mentioned, at 83.85. The R2 at 78.75. The R1 at 75.30. The S1 at 71.40. The S2 at 67.90. The S3 at 64.10. Locking everything in. We tend to maintain a bullish outlook for the commodities price as we see it paving the way for the 75.30 resistance line. One small word of caution as well here. I would be noting that the RSI indicator has reached and flattened out on the reading of 50, implying a rather indecisive market sentiment that may slow down the bull somewhat. On the other hand, as long as the upward trend line remains intact, we maintain a bullish outlook. On a fundamental level, okay, we would be noting the state of the US oil market, a possibly tight US oil market, in my opinion, could support oil prices. On the other hand, I still maintain my worries about the demand outlook of the commodity, especially from China, which should such market worries intensify, we may see oil prices weakening, dropping. Last but not least, I would be noting also the situation in the Middle East. And at this point, we note that there was an escalation yesterday of the fighting along the Israeli-Lebanese border between Hezbollah and Israel. Should we see a full blown out invasion from the IDF on Lebanese soil, then we may see oil prices, I wouldn't say skyrocketing, but getting substantial support as the supply chains of the international oil market would be under threat. That should sum it up practically for oil. Let's have a look at US stock markets starting. You know what? Before we go to US stock markets, let's have a look at gold. And we note that gold had some upward movement yesterday, yet today during the Asian and early European session remains flat. The fact that the price action has hit the upper Bollinger Band tends to exactly slow down the bulls, but the upward motion is there, and I wouldn't be surprised to see the price action of gold reaching new record highs by breaching the R1 2638. Mind you that the fact that the price action of gold has reached such high levels tends to provide some worries or some hesitation, if you prefer, for gold bulls. And the main reason why is because we're entering uncharted waters. It's a level at which many gold traders may try to cash in any long positions or may close any short positions. On a fundamental level, practically, I would be noting the negative correlation of the US dollar with gold. Note that we had 1, 2, 3, 4 days of gold's price being in the greens. I would be also noting the path of US yields. Should we see US yields falling, we may see gold's price getting additional support, given that US bonds and gold tend to have a competitive relationship. Both are safe havens. While a possible rise of US yields could make US bonds a more attractive alternative to gold, given that gold bears no interest, has no income. On the contrary, I may add that gold has storage costs, which are an issue. Now, for a bearish outlook to emerge, it's very difficult. The price action of gold would have to drop, break the 2600 support line, also break the upward trend line guiding it, and aiming, if not reaching as low as 2530. We're talking about $100 plus of drop, which is, okay, I understand it's gold's price, but even for gold, I think this distance may require some days. Let's have a look at US stock market, starting with S&P 500. Okay, to be updated. Moving to US 30, also to be updated. And at this point, I am going to be opening it. Give me a sec. Opening the market watch. Show all. Opening a new chart window for Dow Jones, Nasdaq, and S&P 500. Let's upload the template. That's better. Now we are at S&P 500's daily chart. A clear upward movement is in the works. It's characteristic how the upward movement was renewed in the past few days and is supported by the upward trend line. So we tend to maintain a bullish outlook. Let's see how high it can go. Note that today's high was practically equal to the high 3 trading sessions ago. So that could be a resistance line. We're talking about a record high level here. And that's at 5,740. So for the bullish outlook to remain, we would require the index to breach above the R1. Let's have a look at the support lines. One could be this peak here, but in my opinion that's too narrow. I would be choosing this level. And note how this level provides support right here and here. It was tested. So that should be colored in green. And it's called the 5575. Definitely another support line is on this chart here. 5390. Sorry. And another support line, I would be placing it on this chart. Could go a bit lower. I think we have a mid level here. I'm going to be raising it up to here. Nope. Here. Yeah. This level was tested to the upside and to the downside. It was briefly breached for a couple of days, but it was tested on both sides of the aisle, so I'm keeping it. It's the 5233. So let's place some labels. R1 being placed at 5740. S1 at 5575. S2 at 5390. And S3 at 5233. Next resistance line, I'm placing it at 5700 and 5900. Could go as high as 6000. No, could not. It's too high. And the next one at 5900,100. Widening it. And the R2 being placed at 5900 as mentioned before. That's it. So we tend to maintain a bullish outlook for the index, expected to breach the R1 5740 and set the next possible target for the bulls at the 5900 resistance line. Note that also the RSI indicator is on the rise. It's nearing the reading of 70, implying that the bullish sentiment is strong and actual building still up. That should sum it up for the day. For more of us here at IronFX, best wishes for solid trading.
welcome to IronFX webinar series, and today we'll be going through Fibonacci crash course. Okay, so if you guys have any questions while I'm going through, just feel free to type it in the chat box below, and I'll answer your questions straight away. All right, so let's begin. Okay, my name is Woon Hong, and I'm an investment analyst at Everest Fortune Trading Group. Okay, so we have a collaboration with IronFX, and this is for the webinar series. Okay, and this is the disclaimer as usual. Remember that everything in this video is educational in nature, and nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade, okay? All right, so the agenda for today, we have quite a few things to cover through, especially mainly focusing on Fibonacci retracement, extensions, projections, and expansions. Okay, so firstly, we'll be going through Fibonacci retracement essentials. Secondly, we'll be going through ideal market structure, significant swings following market trends. Thirdly, we'll be going through the different Fibonacci retracement levels. And second last, we'll be going through Fibonacci extensions, projections, and expansions. And lastly, the confluence levels that we should watch out for, and how can we combine these Fibonacci levels to show that there is Fibo confluence in here. Okay, so all right, so firstly, Fibo retracement essentials. So the checklist is very simple. We have 4 essential steps. Firstly will be, is the market structure clear enough? Look for big zigzags in the market. And secondly, identifying the recent trend. Prices going down or up. So is it a downtrend or is it an uptrend? Thirdly, to identify recent major swing lows and recent major swing highs. And the last one will be connecting the two extreme points, highest to lowest, which is a downtrend, and lowest to highest for uptrends. So what is the ideal market structure? So these are insignificant swings right here. These swing lows and swing highs are too insignificant, and they are not good to use for the Fibonacci points, because these swing lows and swing highs are too narrow, too small, right? And you are not able to draw it correctly. You may be able to draw it correctly, but these points, for example, you draw from this low to maybe this high, is not efficient at all because these peaks are too small, right? And this is the second example whereby there is these are insignificant swings because, again, these swings are too narrow and price movement is too small. Okay, so let me just adjust. All right, okay, let's move on. Okay, so here is a correct example of significant swings. We have clear moves up and down, and with obvious peaks and troughs. So these are the peaks are the highs right here, and the troughs are the swing lows right here. Okay, so we have a very clear market structure and movements. All right, so here is another example of significant swings. So I've drawn out the peaks and troughs to point out exactly how clear it should be, right? You can see right here, it looks like a triangle, right? So you can see right here, these are the swing highs, these are the swing lows, swing highs, swing lows, swing highs, and swing lows. Okay. Next, following market structure. So you can see right here, we have a very clear downward movement. Oh, sorry. Okay, then secondly, the Fibonacci retracement trend line follows the price movement. So if you're in a downtrend, right, you're drawing from the top to bottom. So these fibs tend to work better on higher time frames. For example, your H1 and H4 time frames, because there are less noise. Less noise meaning there are lesser candlesticks, right, in the market. So your H4s are the ones that are more accurate. And we always say that high time frame is always king, right? Because it's more reliable in a sense. Okay. So this is what is wrong, in a sense that Fibonacci retracements should not cut through two large areas of the market structure. You can see right here, these lows connecting to these highs, you are cutting through this whole area right here, this whole down movement over here. So you should connect from these lows to these highs and not this one instead. Okay, you should not deviate too much from price movement. Okay, excuse me. Okay, so we have a clear market structure right here. We can see the highs, which are this the peak right here, and then the lows will be this area right here, the peaks, the troughs, the peaks, and the troughs. Okay, so you can see very clear triangular looking patterns. So this is what we call unclear market structure, in a sense that price is ranging in this area right here, and there are too many narrow and small movements over here. And then suddenly we have a spike upwards and spike downwards. Okay, so these are irregular movements and it is unclear market structure, so you shouldn't trade pairs like this. So usually this only happens for like a exotic pairs such as maybe GBPUSD, EUR, AUD, etc. Okay, so what are the different retracement levels? Okay, so we have, of course, in within the 100% and the 0%, we have our 23.6%, 38.2, 50, 61.8, 78.6. Okay, so oh, my screen is not showing. Oh, sorry, give me a, it should show. Oh, give me a second. Okay, is this better? Can you guys see my screen now? Okay, are you guys able to see my screen? Yes. Is visible now? Yes. Okay, so let me just go through again. Okay, so basically this is the checklist. All right. Just now I mentioned, is the market structure clear? And then we should identify recent trend prices going down or up, and then recent major swing lows and recent major swing highs and swing lows. Okay, then we can connect the two extreme points, highest to lowest, which is a downtrend, and or lowest to highest, which is an uptrend. Okay, then ideal market structure. So these are insignificant swings because the movements are too narrow. Okay, you cannot see significant swings. All right, so this is another example of a insignificant swing, because you can see right here the movements are too small and we don't have a spike upwards or downwards. Okay, so these are significant swings, right? A long rally upwards and a long drop downwards. Okay, so these are significant swing highs and lows. So you can see here the triangular patterns, right? Significant swing highs, swing highs, swing highs, swing lows. Okay. Then we should follow market structure, clear downward movement. So from the point 1 to point 2, you draw from the top to bottom, and you can see that the fib retracement trend line follows the price movement. It tends to work better on higher time frames, for example, H1 onwards. Okay. All right, so this is something that is wrong in a sense that fib retracement should not cut through two large areas of the market structure. You can see right here, it cuts through this whole downward movement, right? So you shouldn't draw from this low to this high. If you want to draw it, you can draw it from this low to this high. Okay, because when you are drawing fibs, it should not deviate too much from price movement. Okay. Also, This is a very clear market structure. You can see the highs, the lows, the highs, the lows. Okay. So what is an unclear market structure? You can see for this market structure is very messy. And this is, like you can see right here, is ranging in an uptrend, but it's making very small movements, very narrow movements. And we can only see maybe this swing high right here, but this movement is too close in a sense that there isn't a proper price movement here. It's just price spiking up, maybe because of news. Okay, then you can see right here, very small movements over here. Okay, so what are the what are the different retracement levels? So the different Fib retracement levels, all right, so 100% to 0%. So we can see that there is the 23.6, 38.2, 50, 61.8, 78.6. Okay, so your extremes are your expansion levels. So the negative 61.8, negative 27.2, and then we have your extension levels, 127.2 and 161.8 extension levels. Okay. So you can see right here, this is your range of Fib retracements from 0 to 100%. Okay, you can see your positive Fib retracements, which is greater than 100%. 127.2% is over here. And then the expansion levels are below the 0%. Okay. So what are Fibo extensions? Okay. So Fibo extensions are above the 100% level. All right. So what the two that are used would be 127.2 and 161.8%. All right, so you should always look for a Nike tick to find these very powerful setups. You can see a Nike tick right here. Okay, so once it goes past the 100% level, you should watch for reactions of the 127.2 and 161.8 in this GIF over here. Okay, starting point, you see ending point, Nike tick, right? All right, and then you are plotting, you can see you are plotting the Fib retracement tool. All right, then price actually reacted off the 127.2 first, and then it broke past and reacted to the 161.8. So you can see, right, very nicely reacting there and then going downwards. Okay, so you can see price reacted twice actually, and then came down and broke past all the way back to our midpoint. All right, so Fib extension levels. So this is example number 1. So you're drawing your starting point here and then your ending point here, right? And then price actually, see in the Nike tick over here, price actually reacted here at the 161.8 Fib extension level, and then it reversed all the way down. Okay, so it's very important. Always look out for a V shape between point 1 and 2 and 3 when you are trying to use the 127 and 161.8 retracement levels. Okay, so this is example number 2. So example number 2, we can see right here, we are drawing this, we can see a peak over here, right? If you go down to maybe the lower time frame, okay, you can see this rejected wick over here. You can draw this 100% to your lows right here. And then we can see that price reacted off the 127.2% extension level, also because we have a major swing high over here. Okay, so price will always react. Just remember, price will always react to major key levels and then your retracement levels. Okay, so try to look out for your key levels first and then your retracement levels. Okay. All right, so just to zoom in, we can see right here that price reacted very nicely. Bodies all closing below the 127.2 extension level and then reversing downwards. Okay, then we can see right here, we are drawing from this low, right, to this high. And then we can see price actually broke through the 127.2 extension level and then came all the way down to the 161.8 extension level. So right here, you can see price reacted very nicely and is going to the upside right now. So the next one I'll be going through with you is expansions. Okay. So for expansions, Fibonacci expansions, right? So for Fibonacci expansions, is less than the 0%. Okay, so the two expansion levels that we will take note of will be negative 27.2 and negative 61.8. So we should always look out for a flash zigzag when identifying these Fibo expansions. Okay, so one thing that we have to know is the clearer the movement of the zigzag, the better, and we ideally need to wait for prices to retrace at least 50% in 0.3. Okay, so at least 50%, right? Price coming down here, retracing 50%, and then before taking off in the other direction. So we are expecting a sell right here at the negative 27.2 expansion level. Okay, so the best situation would be that you are looking, let's say you enter a buy right here, and then you are buying all the way, looking for it to break here to go to the negative 27.2 expansion level, right? Then once price has very nice movement upwards, you can sell at the negative 27.2 expansion level. Okay, so we should watch out for the reaction of this level. You can see price tapped this negative 27.2 expansion level and then came all the way down. Okay. So the first example of the Fib expansion would be, so your starting point is here. Okay, and your ending point is this swing low right here. Okay, so price actually retraced up to the 61.8% level. So that's the criteria. So remember, the criteria is to retrace at least 50%, right? So price retraced all the way to the 61.8% Fib level. And then what we're looking at is that price could come down to this negative 27.2 expansion level. Okay, so let's just see how it plays out. Okay, you can see right here, the price actually came down to this negative 27.2 expansion level and then bounced up really nicely from this area. Okay, there you can see that price usually comes back to the ending point, right? So your starting point, ending point, right? So it came back to this swing low support level, which because it was acting as a pullback resistance. Okay, so this is something that you can take note of. So maybe let's say you enter right here. Your first take profit could be at the ending point, and then if it breaks past, then your second take profit could be at the 23.6% Fib level right here. But since it really broke past and then reacted off here, this whole Fibonacci retracement will be taken out, and this level cannot be used. So you should identify the next key level instead. Okay. Right. You can see. Okay, so you can see right here. Right, take note of the shape of the flash. So make sure, right, zigzag here, right, and then price has didn't close above this high, so it retraced at least more than 78.6% of the Fib, and then come down. Okay, so it broke past this low, so that's your second criteria. Broke past this low, then bouncing off this negative 27.2 expansion level. You can see right here, all the different wicks, price didn't even close below this negative 27.2 expansion level and flew up. Okay, so next, all right, so the fourth example. Okay, so in this GIF, take note of the shape outlined by the orange arrow. Okay, price retraces more than 50% of the Fibo trend line, and in this case, more than 100%, and reverses nicely off the negative 27.2 Fibo expansion level. Okay, so this is an exception whereby it actually retraced more than 100% of this Fibo trend line, came all the way back up, and reacted off this negative 27.2 expansion level. Okay. All right. So what are Fibo projections? Okay, so very simple. Fibo projection should not be confused with Fibo retracement. Okay, so because Fibo projection uses 3 points, while Fibo retracement uses 2 points. All right, so Fibo projection percentage use will only be 61.8, 78.6, 100, and that's the max. Because 127.2%, 161.8, and 200% are only 127.2 is weak, can only be used as a supporting argument, while the 161.8M, 200% are more often used in alert waves and not such simple tools. Okay, you are usually looking for a flash zigzag, same thing in this type of Fibonacci retrace projections. All right, so you can see we have a 100% Fib projection right here. Price actually touched this area and then go up. So for Fib projections, you are taking the vertical distance from 0.1 to 0.2 and project it from 3 onwards. Okay, so 3 onwards, then here you're projecting it downwards. Okay. All right, so here's a simple example. You can see clearly the starting, the middle, right, and ending points follow the swing highs and lows of the price. Starting, middle, and ending. So this will be your start, your swing high, your swing low, your middle, and lastly, your last swing high will be your ending. So Fib trend line should follow price movement closely and should not deviate too much from the trend line itself. Okay. So you can see right here, starting, middle, and ending, right? So we project the Fibonacci as extension right here. So if you're drawing from this swing high to this swing low and this swing high, right? You're projecting that price will come all the way down to this area. Okay, so the 78.6 Fib extension is a really strong level too. Okay, pro tip, always look out for big zigzags. Okay, the bigger the zigzag, the better in not necessarily have to be big, but it is more accurate in a sense that price will be more accurate. Okay, so for this one, we can see the price actually came down and touched this 78.6% Fib projection and then went all the way up. It is possible for you to trade this down move right before buying here, but it may be slightly riskier for those that are not too experienced because you may not know where the key levels are or like basic market structure, etc. So you should only enter a trade when you're confident and you know that this level is able to this level is the projected level that what's this Fibo projection is telling me. So I will enter right here. Okay. All right, so this is another example. So take note of this zigzag shape once again. So you can see this big, very, very big zigzag shape, right? So this time it is inverted, meaning that you're starting from the bottom to the top. And back to the bottom. Instead of top, bottom, top. This is bottom, top, and bottom. Okay, notice the clear movement in price structure, which our Fib projection trend line follows. We are projecting to reverse off the 100% Fib projection right here. And then let's see how it plays out, okay? So you can see right here, price actually reacted off the 100% Fib extension level and reverse all the way down. Okay, so when does a Fibo retracement become invalid? So one of the common scenarios of this is when price makes a lower low. So okay, lower low, And then assuming you are drawing a Fib retracement from the top to the bottom, okay, if there are bars on the right that break your ending point, it becomes invalid. Okay, there are Fib retracements that are negative, which I mentioned previously, negative 27.2 and negative 61.8. And we will touch on this as they basically go beyond your endpoint, yet they are still valid. Okay, you can see right here in this picture, this price actually broke this low, right? So it shows that price is now, so this Fib cannot be used unless you are projecting a expansion level, right? But for expansion, because price didn't retrace back to 50%, then we cannot use the expansion. Okay, always remember to pick the lowest point with nothing on the end of your ending point. All right, so confluence levels. How can we combine your Fib levels? Okay, so multiple Fib retracement levels lining up together right here. And then you can see we have the negative 27.2 Fibo expansion level. So it's this movement down right here. And this could increase the probability of a bunch of Fib retracement levels working versus a single Fib retracement level working. So you can combine these Fib retracement levels and you have your Fib confluence levels. So that's why price actually bounced off the Fib confluence area when there were 3 confluences in this part. Okay. Right here, this is the same. Okay, the third one will be your 61.8% Fib projection and negative and 127.2 Fib extension. Okay, so you can see right here, you project from this high to this low to this high, and then you can project that price could come to this 61.8% Fib projection level. And then we also have the 127.2% Fib extension level. Okay. All right, so same thing, but this one is kind of inverted. Okay, so you can see right here that if you draw from this high to this low, so your 100% will be right here, because there is your your 100% Fib projection will be right here. And as for Fib extension level, oh sorry, here, this circle area. So your Fib extension level will be this negative 127.2% extension level. So while these two are working together, right, and this area right here, I will assume that there is a swing high on the left. That's why price actually make such a dump right here. Okay. All right, so we can see right here your negative 61.8% Fib expansion and 161.8% Fib extension. Okay, so negative here. And then negative, and then the 161.8% Fib extension, because you can see price actually broke past the negative 27.2 and then followed by the 127.2%. Okay, so right here we have our projection level, right? Top, bottom, and top. So this shows Fibo confluence and then negative 27.2% expansion and 127.2% Fib extension. All right, so trade management with Fibo confluence. So a stop loss beyond a key confluence area, price is attracted to such stop loss. Price is attracted to such strong areas of Fib confluence. So if your stop loss is right here, right? Instead of buying, you will most likely get stopped out before the market reverses. Okay, so for your take profit, it will be for take profit, very simple. Take profit target before a key Fib confluence area. Because when price reaches the Fibonacci area, there's a high chance that you will not be able to go beyond it. And instead of reaching your profit target, it reverses back to even worse, your stop loss. Okay, so let me just go through with you guys. The charting itself. Okay, give me a second. Let me shift this out of the way. Okay, so what are we looking at? Let me look at this chart right here. All right, you can see price has already broken this 23.6% Fib Fib retracement. Okay, then price could come down to a level. Let me try and draw it. Give me a second. We can adjust this. Okay. Right. So we have a very nice shade over here. All right. So we can see previously price reacted off this 78.6% Fib retracement and 78.6% Fib projection, right? Not sure if you guys can see this. We just filter this out. Okay. Yeah, so you can see right here, once price comes back down again, right, I'm very inclined to buy. Okay, because buying off this area will be a good area since there is Fib confluence here, the 78.6 Fib retracement and 78.6 Fib projection. Okay, so let me see. Right about just now, let me see. We don't have. Hold on, guys. Let me. All right, so just now, okay, so right now, you can see we have the 61.8% fib projection and 78.6 fib retracement right here at the same level. So that's why I was inclined to take a buy at this block of this rectangular area over here, and then I was taking a buy. All right, did a quick 1.5% in a couple of minutes because there was G30 was moving really fast. Okay, so this for G30 right here. If I were to enter a buy trade here, right? Okay. Yep, so this area, we also have the 100% fib projection over here, which shows that at this swing low, which shows that this swing low is pretty significant and you shouldn't take it too lightly, because with the combination of these factors, right, it shows that there is fib confluence here. All right, then you can and then you can actually take a position right where you feel that it's gonna go up. Okay, so for US 500, it's very, very simple. Very, very simple. Basically, price will come down to this 38.2% level and then go up. All right. And then your second support will be your 61.8% retracement level. And then you're buying the pullback as well. So this is one pullback level. This is another pullback level. Okay, so right, you can see right here that if price came down, right, retrace at least 50%. Okay. All right. Let's see this. Okay. All right. So let's move on. EURGPY. EURJPY. So euro, pound, dollar. So this is very simple. Basically, that we have our 78.6% level, right? Along with this multi-swing high resistance level. Okay, then we also have the requirement whereby price needs to retrace at least 50%, right? So that's why we can see price is trying to reject this area and come down. Okay. Then lastly, we have this retracement levels, and then we have our 61.8% fib projection going on. Okay, so yeah. Okay, there's a possibility that price may react off this movement because you are not able to take maybe on the 1 hour time frame, you are able to do your do a good one right here. Okay, but then you can see that if let's say you wouldn't want to draw from this area, these highs, and then all the way down here because price will be cutting through, right? So the less cut, the better. Okay. All right. Let me see. All right, so let me just find maybe a couple more example, then in like maybe 10 more minutes, then we can end the webinar. Okay, so just bear with me for a little bit more. I know it may be slightly confusing. If you guys have any questions, just type it in the questions box, okay, so that I will know what to go through with you guys. Okay, so let's just take a minute to think about anything that you want to ask so that I can answer it as well, because usually sometimes people have a lot of misconception on Fibo, and sometimes Fibo the price has already closed, right? So for example, right here, we can see that price broke past, right? Supposedly going to form a head and shoulder pattern, but it broke through and went even higher. Okay, so that is something that you guys should take note of. All right. You guys have any pairs that you want me to go through with you? Feel free to send it in the Q&A box. Okay, so I'll be able to get to them. Okay, if you guys have no questions, then let me just move on. All right. Okay. Let me see where else I can show you guys. All right, so for here, let's say you are GBP, right? What we are expecting would be, right, price has already retraced 50%. Okay, so you shouldn't have to use, I think price is now reacting to 61.8. Yep, price is reacting to 61.8% fib retracement. Okay, this one should also be 61. All right, so what we're looking at for EURGBP, ideally, for it to come down, right? Worst case scenario, right? You can see right here, the first support level, we have this negative 27.2% expansion level, right? Okay, so if let's say price does this, right? So once it completes this move, let's say price is here, then you can use your projection to see where price can go. So this high, this low, and this high. Okay, so if you have this tool right here, you can easily find something which is the 78.6% Fibo projection level. Okay, so once you have this, then you will be able to see where price could lead up to. Okay, so from here, same thing. Let's see, zigzag. Zigzag, right? Okay, so we will draw from this low. Oops. Okay, but yep, you can see right here that maybe this swing low is the one that is closest to this negative 27.2 expansion level, okay? But try not to squeeze your key levels onto your fib levels, because if you try to squeeze, right, then it will not be as effective, because your key levels should always come first. Your graphical key levels should always come first, and then followed by your Fib retracement levels. Okay, so this is just something that you guys can take note of. Okay, so what else can I cover with you guys? Let me see. Okay, so far, is everything okay? You guys have any questions? No questions? Okay. Because it may be if there's no question, I would maybe assume that everything is okay. And then if you guys are unclear of any explanation that I went through with you, just feel free to voice out and then let me know, and I can address it to you guys, okay? Because if not, um I would assume that you guys understand, right? So if you guys understand, maybe I can get a reaction. So like a thumbs up or type it down is fine too. Don't have to be shy because it's just us. Okay. Okay. All right. Let's see, 4 hours. Okay. Yep. So for example, right, sometimes when you're drawing Fib retracement levels, sometimes it's okay if price maybe cut through a little bit, because on you should refer to the daily, right? If the daily shows that it's a very nice movement, right, then you can draw it on the daily. You draw on the daily and then you can come to the H4 to see if it's okay. Means price it doesn't deviate like maybe too much here, then come down, cutting through, etc. Okay, so sometimes cutting through a little bit is fine, but not too much. Okay, so this is something that you guys can take note of also. All right, then next, what else can I cover with you? Okay, so sometimes you may be able to see projections, like for example here, here, and here. Bigger projections are always easier to see rather than the smaller ones. So let's take maybe Bitcoin as an example. Okay, sometimes you may not be able to see such movements. So uh let's see. Okay, sometimes rarely, but sometimes if I can't really see, I will use the line chart and then I'll pick these lows right here. Okay, and then I will draw to the highs over here and then to the lows. Okay, just to make sure that I'm not missing out the peaks, because on the line chart you can see that these are the max of the candlestick, right? Right, these areas. So you can see very nicely, right? If I use the freehand tool and draw right here, right here, and right here, right? And then it will line up very nicely with the body of the candle. Okay, so this is something that you guys maybe could use. Okay, let's see what else I can share with you guys. Okay, so just remember that your expansion levels, your negative 27.2% is the strongest is the stronger one compared to the negative 61.8. And also for the extension levels, the 127.2% extension level is stronger than the 161.8 extension level. Okay, and your 61.8% for your Fib retracement level is your golden ratio. So usually price tend to react a lot more there compared to other levels. Sometimes for example your 23.6% level is pretty weak. So sometimes I don't really rely on the 23.6% level. Okay, but more often it reacts to the 61.8 and 78.6. Okay, for the 50% is more or less it works pretty well also, but it works on maybe, let's say, pullback supports, so pullback support levels. So that's what I noticed. Okay, so yes, let me see. Yep. Yep, so this area is what I'm looking at for just an example, because we have Fibonacci confluence here. We have our 78.6% retracement level and 61.8% projection level, and then we are looking to buy this move upwards. Okay, so this is so you don't have to be afraid, you just have to be brave, and then you can be able to find optimal entries right here. Okay, all right, so yes, that's all for today's session, and I hope you guys actually learned something new and are able to understand retracements, projections, expansions, and extensions. Okay, so this is a whole crash course on Fibonacci itself, and I hope you guys are able to use it properly and use it well, so that you won't be able to find it misleading or whatnot. Okay, so thank you guys for tuning in to today's webinar, and I hope you guys have learned something new if you haven't. Okay, so thank you for being attentive, and I appreciate your time for listening to my webinar for today. Okay, so that's all I have for you guys. All right, take care, and I'll see you guys in the next webinar. Bye bye.